And these are patterns that represent price in the market. Like, for example, let me show you. A candlestick can look like this. So normal candlestick, it looks like this. You can see it looks like this. Yeah. So this one is called the body. It's called the body.
Okay.
It's called the body. Then this one is called a wick. It's called a wick. So
Okay.
this one can be a green candle because we normally have green or red candle. So
Yes.
let's get this one. You can shade this one. So this one is a green candle. Then let me draw a red. Let me draw a red candle. Let me draw a red candle.
Okay.
Then we have got here a red candle. So this one is called a body. It's called a
I
wick.
can't see what happened. Okay.
Yeah, it's called a body and it's called a wick. So let's shade it, but it's not very clear, but you can just shade it.
No problem. Hello.
Yeah, just a minute. Just a minute. A minute. So we have said we have got a red candle, red candle, red candle, and the green candle. So this one is called a wick. It's called a wick, and this one is called a body. And here, so a red candle, we have here the opening price. So here is the opening price, called the opening price. Then here is called the closing price. Closing price. So for the green candle, here is called the opening price. Then here is called the closing price. So
Okay.
yeah, so the bigger the candle, the more the activity it is in the market. So when you see, for example, a large candle, this means there is a larger activity in the market by that time. Maybe there's news, maybe there's reports in the market that is being advertised in the market, or maybe there is, for example, the banks. Maybe the banks, they have decided to push the market up with a bigger volume. Maybe some of the billionaires, they're pumping more money to certain currencies. So you'll normally see big candlesticks.
Okay.
Then when you see, for example, a small candlesticks, like for example this one, it looks like this. So this means there's low activity in the market. This means there's low activity in the forex market. Then when you see a bigger candle, this means there's higher activity in the market. So
Okay.
The highest point of the week here is called the highest point market has reached during that session. Then the red candle, this means is the highest point, the lowest point market has reached by sellers during that session. So that is called a week. The highest, the lowest point is the lowest point, and the highest point. So this is how the candlestick looks like. So let's dive on charts that I can show you.
You said the highest is what and the lowest is what? The highest?
Oh, let me repeat it. So here is called the highest point. The highest point market has reached during that session. So in the market, so this means this market went until here, then sellers came in and rejected the market, and the market came and closed here. Then from here again, the market was trying to move down. Then all of a sudden, certain buyers came to the market. Then they started pushing the market up. Then here was the closing point. So this means this week, the week means there's a fight between the buyers and the sellers. So whenever you see a week, so whenever you see a week on the market, this usually means there's a fight between the buyers and the sellers. So the sellers are trying to push the market up, then down, then the buyers are coming up, push the market up. So during those moments, we will normally have wicks. So this means the buyers were trying to push the market up, but the market came and closed around here. But previously the current price was here, but the market came and closed here because sellers came in and dropped the price down. You're getting that?
Yes.
Yeah. So let me show in the chart. Let me show you in the chart. So let's say, for example, so the one I've showed you is that, so the green candle, this means the buyers are dominating the market. So whenever you see a green candle, this means the buyers are dominating the market.
Okay.
Yeah. Then whenever you see a red candle, this means the sellers are now dominating the market.
Okay.
Yeah. So, like for example here, I've told you that from here, you can see here is the opening. So the opening price. So this one is the opening price. Let me point it. So from here, so we are focusing with this candle. Let's focus with this candle first. So we are focusing with this candle. You can see this candle.
Yes, the red. Okay, yes, the green one.
Yeah, the green one. So you can see the green one. So the green one, we have said that here is the opening price. You can see the opening price. Here is the opening price.
Yes.
Then the closing price is here. Here is the closing price. So this means the candle opened, then the market dropped down. You can see the market dropped down.
Yes.
The market was controlled by the sellers. Then all of a sudden, the buyers came in with more pressure. This means that more buyers were coming to the market. So when the more buyers were coming to the market went up again. The market went up. The market went up. You can see. So this means
this one is too difficult. I'm not understanding.
You're not understanding this one. So this means,
yes.
Let me repeat it. So we have said we have got the green candle and the red candle.
Yes.
So let's say for example the green candle, this one for example. So this green candle, the market opened here, then the market went down.
Yes.
Sellers tried to drop the market down, but all of a sudden the buyers came in with more pressure and the market started moving up. Yeah. So when this candle was going down, it was a red candle. But because every candle forms after, because it depends with, for example, which type of trader you're trading. So like for example here, you can see we have got 1 hour. You can see 1 hour. So this means every candle forms after 1 hour. Every candle forms after 1 hour.
Okay.
Yeah. So every candle forms after 1 hour for my screen. So this means, when the candle was opening, it was being controlled by sellers. But after 60 minutes, the buyers came in and dropped the market up. So the candle closed green with a big body. You can see the green with a big body.
Yes.
So this means the buyers are in control of the market. So whenever you see this one, the buyers are in control. So most of the times, let's say for example here, let me remove these drawings. So you can see whenever we have a red candles. So from this side, you can see from this big red candle. This means there are more selling pressure coming to the market. So this means there was more of selling pressure because you have got the red big candle coming down. You can see.
Yes. Okay.
Yeah. Then when the green candle starts to move up, then the market starts to move up. You can see the market starting to move up because the buyers are in control of the market. So you can see whenever the market sells, whenever the market sells, it produces big red candles. You can see the big red candles. This means the sellers are in control of the market.
Yes.
Yeah. Then whenever you see these wicks, you can see the wicks from here.
Yes, I can.
Yeah, the wicks means the rejection. So this means the sellers were trying to move the market down. This means the sellers were trying to move the market down, but the buyers overcome them and the market went up. So this means this body was previously around here. This body was around here. This body, when the candle was opening, the body went down until here. But before the 1 hour ends, ends, buyers came in and drove the market up.
Okay.
So this means the price was recently here. You can see the price was recently here, but after some time, the buyers came in and drove the market up and closed around here. You can see. Yeah. So whenever you see this rejection, this means sellers are being rejected. Sellers are being rejected by buyers. Whenever you see wicks on downside. So we have wicks on downside. Are you able to see wicks on downside? Yeah.
Okay.
Yeah, this week. So whenever you see wicks on a downside, on a downside, for example, here, so this means the buyers are in control of the market, because sellers were trying to push the market down, then buyers came in. Like, for example, today, this market for today, let me show you the market for today. The buyers are, so this means the buyers were trying to push the market up. So this body was around here. It was a full body. Yeah, like today, this one was actually a full body. It's actually a full body. This one. So this one was a green full body around here until here. But because we were on a resistance, you can see we are this area, we are on a resistance. You can see we are on a resistance, this area.
Yes.
So yes, because yeah, you can see because we are on a resistance level, this means the sellers around, more sellers are they have set their selling orders around here. You can see this area. So this area, we have got so many sellers around here. So when this market came up, when the buyers were trying to push the market up, then the sellers had already set their selling orders around here. Then the more sellers came into and drove the market down. So this market will actually come until here. You can see we have got support. So this market will actually move down till here. So most of the times we normally see the candlesticks. Like, for example, here, the buyers were trying to push the market up, but sellers were being here on a more selling pressure. Then the market dropped down. So this means whenever you see wicks on upside, on resistance, this means the price is being rejected going up. You can see on a resistance. Whenever you see, yeah, you can see on a support here. You can see on a support, we have got wicks. Like, for example, here we have got wicks. We have got wicks on below the support. So this means the market is being rejected to go down because we have got more buyers coming to the market.
Okay. Can I answer this call? My grandmother is calling me. I'm sorry. Hello, Gogo. Hello, kid. She hanged up. I'm sorry about that.
No problem.
Hello.
No problem. So the candlesticks. So the candlesticks. So the candlesticks, we have said we have got the red candlesticks and we have got the green candlesticks. So the green candlesticks means buyers are in control. Then the red candlesticks means sellers are in control of the market. Then we have said about the wicks. So can you maybe elaborate a little bit about the wicks, so that I can see if you have really understand?
Okay, you said when the wicks are on the downside, it means the buyers are dominating. Yes, because they are going up. The candles are going up. The buyers.
Yeah,
the buyers are in control. You said.
Yeah, the buyers are in control. Then what about
Yes,
the?
I'm right next. Okay, when the candlesticks are on the resistance, you said the sellers are in control.
Sure, that's
at
correct.
The wicks.
Sure, that's correct. Yeah, so that's that. So that is the one basic factor of, for example, candlesticks. That is the one type of candlestick.
You're breaking. I don't know what's up.
Yeah.
I said you are breaking. Maybe it's the network. Oh God.
You can't hear me correct. You can't hear me. Let me. You can hear me now.
Fine.
Can you hear me?
Yes,
right?
I can. Let's continue.
Maybe you have got problem with the internet, but I think now I'm clear.
Yes, you're crystal clear.
Perfect. So we have finished with the basic of the candlesticks on how to understand the candlesticks. So step 2 step 2 of the candlestick is types of candlesticks. So we are going to dive deep into 3 main types. So main types of candlesticks. Main types of candlesticks. Main types of candlesticks. So we have got so many types of candlesticks, but for today, we're going to measure on the main type of candlesticks. So we have got this type of candlestick called hammer.
Okay.
So hammer, we can say hammer. We can say hammer is a bullish reversal. It's a bullish reversal candlestick pattern. It's a bullish candlestick pattern. It's a bullish candlestick pattern, which means bullish reversal patterns, which means buyers are in control. Buyers are in control of the market. So it's called a hammer. So for example, whenever I say bullish means it's another name of buying market. Some bullish market, bullish reversal candlestick. Yeah. So another name of bullish is buying. So a hammer. We have said is a bullish reversal candlestick, which means buyers are in control of the market at that moment. So let me draw a hammer. So a hammer, it has got a short body with a long wick. It looks like this. Yeah, it looks like this. So whenever you are trading, then you see this type of candlestick pattern. This means the buyers are in control. So actually, you should buy than sell. So whenever you see this type of candlestick, most of the times, it usually means the market will go up. Most of the times, whenever you see this type of candlesticks, this means the market will go up. So this means it has got a short body with a long lower wick. So here we have got long lower wick. We have got long lower wick. Long lower wick.
Long wick.
Yeah, long lower wick. So this long lower wick, it means that's a hammer. So yeah, let's check on the chart.
Long lower wick.
Yeah, long lower wick. So whenever you see that type of candlestick pattern, this means the market is going to move up. So the color doesn't matter mostly on a hammer. You can see we have got here one, we've got here one. Yeah, you can see the market actually went up. So let me show you another one. We have got here another one. You can see. You can see. You can see.
Yes, okay.
So the color doesn't matter on a hammer.
Okay.
We have got here another one. Then the market went up again.
Oh yes.
Then let me show you. Let me show you another one. We have got here. Though this one, it doesn't have a long lower wick. Let me
Okay. Okay.
We have got here. We have got this one. You can see.
Okay.
Then the market went up. Yeah, the hammer.
And that one also. Okay.
Yeah, we have got this one. We've got so many. Let me change market. Let me change the market. Let me change euro, GPY. Let me change euro. So let me check. We have got here another one. You can see this one is. You can see another one here. Yeah, and actually the market went up. So this mostly hammer, you'll spot this hammer mostly on a support.
Okay.
You can see here. You can see here we have got one, then we have got two here. Then the market actually went up.
Okay. Yes.
Yeah, let me spot another one. We have got here. You can see here. Then the market was consolidating. Then actually it went up.
Yes.
You can see here again, the market went up. You can see this one, the market went up. Let me.
Okay, can I ask you a question? After going up, like how long does it take for the market to sell to go down?
Maybe so what you're gonna do is to wait for the market until it reaches on a resistance.
Okay. Oh, okay, and then that's when you take your profits.
Yeah, that's when you take your profits. By that time. Okay. So we have got here another one, a small one. This one is just a small one, but it is a representation of a hammer.
Okay.
Yeah. So let me check another one.
Okay.
So most of the hammers you spot on a support. Mostly spot on a support. You can see this one.
Yes.
You can see, and actually the market went really up. You can see. So that is we have got here another one. We have got here. We have got here. So most of the times, and this area you can see, you can put this area is on a support. This all area is on a support. You can see this.
Yes, very true. That one is true.
Yeah, this whole area is on a support. You can see. So this area where you can spot the hammer. You can see one. We have got two. We have got three. So we have got so many hammers. So that is a hammer. So if you want to spot hammer,
at least they give you direction, like.
Yeah, it can give you the direction of where the market. Yeah, of where the market is going. So whenever you spot a hammer, for example, you should buy immediately. You should buy the next candle. So you wait for the hammer. So what is your entry criteria on the market? So let's say, for example, I spot the hammer. Let me spot one hammer so that I can give you an example. So let's say, for example, this is an hammer. Let's say, for example, this one. So you should wait. So you should wait, for example, for the market to open to form another candle. Like for example, here we have got a hammer. Then you should wait first for the hammer to close, then you enter the next candle, buy.
Okay.
Yeah, you should wait. So first you should wait for the candle to close. So the candle depends, because if, for example, you are a long-term trader, you can use 4-hour chart. So this means candle forms after 4 hours if you want to be a long-term trader. But if you want to be a short-term trader, you can use 1 hour, you can use 30 minutes chart, you can use 15 minutes chart, you can use 5 minutes chart, you can use 1 minute chart. Depends with your yeah. So that is called a hammer. So it means the market is being controlled by buyers. So you should wait to time and buy that market. The other type of candlestick pattern is called shooting star. So it's called shooting star. Let me remove this zone. It's called shooting star. So shooting star. Shooting star is just the opposite of a hammer. It looks like this.
Okay.
Yeah, it looks like this. So this means when the market is going up, shooting star will appear, then the market will start moving down. So this means shooting star is a bearish reversal candlestick pattern. So this one you can say is a bearish reversal candlestick pattern. So this means the market is being controlled by sellers. So it's just the opposite of a hammer.
Okay.
Yeah, so let's check on the chart. So shooting star. So whenever you see a shooting star, it usually means the market's going.
It's a long upper wick.
Yeah, long. Yeah, it has got a long upper wick. You can spot this one. You can spot here. You can spot here, isn't it?
Okay.
And you can see the market actually went down. You can see shooting star, then the market actually went down. Let's put another shooting star, we have got here. You can see we have got here shooting star, and actually the market went down. Let's check another shooting star.
And then let me ask you a question first before we continue.
Sure, you can ask.
Agree, we have the shooting star there at the top at the resistance.
Yeah.
So I see here, like before the market formed a new support. So when will I take my profits then? Because it didn't touch our normal support.
So pardon, let me see. It was which support? Let's just use this example. So this means you can see, for example, this one. This one I've used trend line. So we have got the first touch, then you have got the second touch, then you have got the third touch, then you have got the fourth touch. Then on the fourth touch, I have identified a shooting star. You can see the shooting star. So the take profit, you can take maybe the take profit, maybe nearest low, maybe this low. You can see maybe you have entered here, then you can take profit around here, because this one was the previous low. This one could be was your previous low. So if I could enter this red candle, so so the first thing I'll wait the shooting star to close, then I'll enter the next candle. Then my take profit should be nearest the previous low, should be here. Then the market went down. Then I banked how many pips? Like 4 pips. That's how you need to trade.
Okay. It makes sense now.
It makes sense, right? So let's check another shooting star again. We've got here. You can see the shooting star. It has got a small body, and then the market went down. So my take profit should be around here. My take profit will be around here. The previous low. Then I could have taken my profit around here.
Okay.
Yeah, let's check another shooting star. So most of the time, shooting star, you identify it on a resistance. On a resistance. Yeah, on a resistance. On a resistance. You can see here shooting star.
Yes.
Then the market actually went down. You can see the market actually went down. You can see the market actually went down. So if, for example, if you could have used this one, you could have taken your profit around here because we have got this trend line support. You can see the trend line support. Then we had the hammer at the support. You can see the hammer which we have learned. Then the market went up. So if, for example, you could have spot a hammer here, you could have taken your profit nearest high around here. You can see nearest high.
Yes.
Yeah, here.
So okay. So in a way, this hammer and this they kind of give you an idea of how the market is going, of the direction of the market, the next candlestick.
Sure. Yeah. See, let me send you another link so that you can continue from the shooting star.
Okay.